Hello and welcome back to the official Roguefx trading course. Today we're going to be talking about order flow. We will be talking about the flow of money, I guess the flow of price, whether that's creating higher lows to higher highs or lower highs to lower lows. Of course, it's simple to, understand simple structural terms as far as, order flow. However, there is some rules that actually come along with understanding how order is, or I guess you could say orders are in a way being presented. Obviously price is definitely going to descend as price continues its bearish trend, or obviously ascend as price continues its bullish trend. However, what I want to understand or kind of become familiar with is the reason why price chooses maybe this POI over this POI, or price chooses to label this high the protected high, quote unquote, right? Because we could be in maybe like a 4 hour trend, but then on a lower time frame, maybe like the 5 minute, price would be drawing to where obviously internal range liquidity, and in this case, price would probably just stop right here, and then obviously in this case, perform a failure swing and then continue lower. Why does it do that? Why doesn't it why doesn't price consider this our protected high? Or maybe even this our protected high? Why do we have at this point this being a consequent encouragement? Or why do we have in this significant case price choosing to ignore a quote unquote order block to the left? Or maybe price comes back up and decides it just doesn't want anything to do with the 50 and then continues lower. What do we do when that happens? Is this high even relevant anymore? How do you know? And as far as, break of structure, yes, price can definitely, with every break of structure, every range is definitely confirmed. However, what happens when price doesn't break structure and we perform a higher low, higher than the previous low? Price continues higher. How do we confirm that price is going to stop at this location or this location? Or who knows, price can take out every single high before that and label it as liquidity. How do we know each high and low is confirmed? How do we know this? That's why it's not only great or beneficial to understand structure and as far as ranges. And I'm not saying understand. I'm really saying comprehend, right? Have this in the back of your mind on some like second nature type stuff, because that's what it takes. These markets, every time you find, or you feel like you found the key to the holy grail, the key to the markets, the key is definitely switched up by the next session, by the next day, by the next week. These markets are ever changing every day, every single day, every minute, every hour, every weekly candle, every daily candle, forever changing. How do we adapt? Now, to confirm um, a lot of these quote unquote questions, I would like to divert your attention to an actual graph chart, because I can definitely sit here and illustrate all day long, but if it's not on the graph, is it necessarily valid information? I know it's valid information. Don't get me wrong. Okay, so this is going to be GJ in a bit of a smart money point of view. If we go ahead and mark up our range, we can see that we have you can call this a liquidity grab of a higher time frame structural high. At that point, price has confirmed our low, and as you can see, price on top of our week high, Price has performed a liquidity grab as well as a choke, maybe even a break of structure. At that point, our weak high is confirmed. We have a range. Talked about this in my previous videos. If you want to go back, I believe it was one of my first videos. However, in this course, we will be going over liquidity inducements again and more in depth, as this is a trading course. Understand that a trading course doesn't mean, honestly, way too much. I have been through way too many trading courses to understand that a trading course doesn't mean profitability. It doesn't guarantee profitability. What guarantees profitability is a mindset that is resilient, a mental fortitude that is unbreakable, a work ethic that is different to a certain degree, very different. You have to be willing. Like, how are you going to set yourself apart? What sets you apart from at the utmost your next person, the next person you're thinking about? What sets you apart? Right. Continuing on, we found our range. We located whether we were in a bullish or bearish market at the moment. Now, of course, I know this is hindsight. Understand that this is my trading course. This is how I teach. If you don't respect it, please log out, unsubscribe, and go check out a Wyckoff schematic or go learn supply and demand, however you feel. But understand that when you start off with a new mentor, you are essentially starting off from square zero. You are learning how to trade, especially with this information. So, use your discernment. I see some internal range liquidity worth looking at right here. So I'm going to obviously mark out that low, and that will be our target going forward. Again, this will definitely be, to an extent, explained later on in the course. Definitely just give it a chance and understand that the information it will come out in time. This is a whole trading course. It takes time. It's going to take effort. You're going to have to watch these videos more than at least 5 times to really get it, and then to understand it maybe like 3 more times, and then to apply it on some second nature, like probably another month of really just consistently applying these concepts. This is the journey you set out for. This is, whenever you said, I wanted to be a trader, I want to learn how to trade, this is the journey that you agreed to. Knowingly or not, this is definitely the journey that you agreed to. You were in the right place at the right time. However, I will not spoon feed a soul. I will not sit here and pass out money. I will not sit here and, there's knowledge, there's information, but at a certain point, what are you going to do with it? You know? So, again, moving forward, we have our targets as well as our trading range confirmed. Now, as far as order flow, you got to understand what's actually happening, right? As far as definitely market structure, right? So, price performed a liquidity grab. At this point, price is very much bearish. It's already known. We took out buy side liquidity. What's next? Sell side liquidity. That's what we are targeting, right? So price performed a liquidity grab, choked, retested, broke another structural low, and price then formed an accumulative behavior pattern, manipulated out of it, took out sell side liquidity, and continued higher. Why did it stop here? Why not here? Why didn't it fill up the candle, or I guess you would say FU candle or significant candle 100%? And you feel like you work hard now, give it a second. So yes, price uses this rejection block as internal range liquidity. We have a liquidity grab, and then we have a draw to lower prices. In doing so, we inevitably took out a structural low. This structural low creates a whole new range. By the time this structural low is taken out and obviously sell side liquidity is taken out, a whole new range is formed. What's next? We took out sell side liquidity, buy side liquidity is next. So what does price do? Price rallies higher and targets what? Internal range liquidity, which happens to be where? An unmitigated wick or a bullish rejection block. It's rather simple when you embrace the knowledge opposed to resisting it. When you embrace the truth opposed to, nah, that's not it. That's not how I trade. That's not, you're right. It's not how you trade. And it's why majority of traders, they lose in these markets because they don't know how to trade. They feel like they want to know how to trade. That's why they continue to throw their money into the markets, not understanding you have absolutely no idea what you're doing. You have no idea what you've gotten yourself into. And that's why I'm here. Price takes out liquidity, right? We are at this point rating liquidity, continues lower. We have a choke. Price retest. Why didn't price come all the way up here? Why didn't price at a point? Why didn't price come back for this fair value gap? This is a choke. Price retest, continues lower. Takes out sell side. Retest continues lower and officially takes out or provides a break of structure. What I want you guys to actually realize at this moment is the reason why price didn't come up for that fair value or 100% fill is because we have internal range liquidity price already took out. There was no reason to understand that this is a choke. So this is probably going to be maybe an intraday, a scalp if you're on the 153 minute. If you're on the hourly, it may be a swing trade. Could possibly be a swing trade. It's going to take its time. And if you don't get in at the most precise high and low or low, obviously if your high is not protected, if your low is not protected, you will be stopped out, stopped out, stopped out, stopped out, stopped out, stopped out, stopped out. It will happen. Not because you're wrong, because you entered too early, entered too late. And it happens. It can happen. That's why it takes the time it takes to hone these skills and to understand that, dang, maybe this is going to take a bit more effort than I had in mind. I don't know. So price provides our break of structure. What's next? We take out sell side liquidity. What's next? Buy side liquidity. Okay, cool. Where are the obvious pools of liquidity? We have an unmitigated wick. But why did price run straight through this? Why did price use this as maybe a smart money trap and ride through it, and then obviously liquidity grab, choke, break, and continue lower? Why did it act like that? We definitely went over this in the I'm not gonna say in the beginning. We definitely went over this. This video is live on the YouTube channel. This is going to be your liquidity void premium pricing. It's going to look different every time. It's going to look ugly every time. It's going to look unreadable every time. And that's what separates the pros from the not so serious traders. The ones that swear they're going to be profitable in this industry, but they never actually accomplish it. Maybe you're not taking yourself seriously enough. I don't know. Moving on, price provides a liquidity grab. And obviously this is going to be our liquidity void. I'm sorry, let me okay. So price obviously reacts to this liquidity void, continues low. In doing so, creating a break of structure. What does this signify? When this break of structure happens, a new range has been identified. Just how this break of structure happened before, a new range was identified. How do we confirm this range, or this, in this case, how do we confirm this strong high? We need a break of a major low. How do we confirm this weak low? We need a break in the opposite direction, pretty much. A break of structure in the opposite direction. So in this case, price provided a choke and a break of structure, retested. At that point, there's no reason, there's absolutely no reason for it to continue lower. The range is set. What's next? What is next to do? Price took out external range liquidity. Where is the location next? Internal range liquidity. Now, why did price run through this, what's seeming to be an obvious order block? Wouldn't anyone take that short? But what people don't understand is those obvious order blocks are just as much liquidity as a equal high, equal low, a slanted high. Just as much liquidity, if not more. Just because smart money loves these order blocks that are not necessarily order blocks so much. This order block closed bullish, which means it established a high. Did this high take out an official high or a major high? No. So it's weak. So price is definitely going to use that as liquidity. As it did, it drew to that internal range liquidity. And what did it do? It retest. Look at the precision. Just look at the precision. That's a breaker block. Look at the precision. It's amazing. This is 7 o'clock in the morning, New York session on a Monday. And you have a smooth intraday. How many pips is this? Off of the precision, 132 pips off of less than 10 pips. And this is what I mean about what I say. What is the return? I'm saying maximum reward, minimum loss. Now tell me, what is the return on investment off of 132 pips? I don't know either. What did price do? Took out liquidity. I mean, at this point, we created a choke, retest, created a break of structure. What did price do? Took out sell side liquidity. So what's next? Buy side liquidity must be rated as well. This is, in this case, this would more than likely be or considered as a liquidity pool. Why? Because, bro, look at it. It looks like a liquidity pool. And, bro, I don't want to sound disrespectful. Bro is universal. I don't care what nobody says. Why did it stop right here? Why didn't it stop or take out this quote unquote weak high, right? This weak high, quote unquote, right? Didn't take out this high. So what did that make this? Liquidity. Okay, but why did it stop right here? As you can see, price performed its liquidity grab, choke, break of structure. By the second break, price had already formed its range. Believe it or not, whether it's big like this or small like this. You got to understand this price, this market is fractal. It's fractal. It's the same pattern every time. So, in an extent, it doesn't necessarily have to do anything that you may obviously may favor your trading plan, because it's not. It's literally programmed not to. So, what did price do? Took out internal range liquidity, retesting what? That's a breaker block. So in a sense, you are maybe risking 20 pips. And if you're really good, you're only risking 10 pips for an overall 120 pips. It can get hectic. I promise you. It's gonna take your time. This is like Forex, man. It's not going to take your money. You give it your money because you're uneducated, because you refuse to take accountability, or undereducated. I don't want to say uneducated, undereducated. So you give the market your money because you're looking for validation instead of taking a step back and understanding maybe there's more to this. Maybe there's a lot I don't understand yet. Maybe I'm not ready. Maybe I need to discipline, to buckle down. Because I'm going to be honest, this industry is very, very unforgiving. Very unforgiving. And if you're not ready for what is eventual, like you will go broke. You will be in debt. You will suffer the consequences, obviously financially, if you are irresponsible. That's why I do push a demo. However, I do push even harder for you to walk away from that demo at a certain extent. And that is where I am here to guide you, help you understand, help you kind of soak up this information so profoundly, so impeccably, that you have no choice but to succeed because you put in the work. And that's the only thing this market asks of you. We have hit our internal range liquidity mark, and Yeah, we're done for this range. Now, I do understand that the market is not always going to, behave like this. There's plethora of opportunity, um, a plethora of, different range types. But at the end of the day, these rules are all going to stay the same. It's not no different. It may look different, but that's because you're inexperienced and you can be. And that's why it takes the time it takes to embrace and be good at this. This is order flow from Roguefx trading course, Forex trading course. I'm gonna see y'all in the next one.